Yo, what's up, everybody? It is what? Tuesday, November. I can't believe it's already November. November 4th. Look, I got the first lemon out of my lemon tree. A little bit green still, but it dropped off. It was on the ground, so I had to pick it up. So I'll put this on my fish tonight. So the first one, folks. Yeah. All right, we had a big down day, 2% down in the NASDAQ. I'll be honest with you, I wasn't expecting a down day today. I told you guys yesterday that because of this strong, very strong flows on Friday, and I was anticipating that yesterday's, with the Social Security payment, we'd get an additional. Actually, that didn't happen. I'll tell you about that in a second. But I thought we'd get a little bit of a run up here in stocks, but apparently some news items, Palantir. I mean, the only thing I could really find pertaining to today and the trading action was a lot of commentary and headlines about stock valuations. And here's what I have to say about that. Like, valuation is a moving target. All right. I mean, there's not any one particular level that you can say, when it hits that level, that's it. That's like a hard ceiling. And also you have to realize that valuation can stay extended or, quote unquote, overvalued for a long period of time if financial conditions, monetary conditions, are such that it kind of supports higher stock levels and consistent strong economic growth. So you got to be careful. It's kind of like these, when I way back in my career when I was trading with technical indicators, it's kind of like, when you're a novice, you look at things like the stochastics or RSI, and that looks like a holy grail. That looks like, oh man, all I have to do is sell when the RSI is high and buy when the RSI is low, or stochastic, same thing. And then you try to do that and you realize, like, it looks great on paper, but when you actually try to do it, you could be in a situation where the RSI stays high for a long time and you went short and the thing just keeps going, market keeps going up, or vice versa, the RSI looks low and you're buying and the thing just goes down. So I wouldn't get lulled into this, the valuations are such and such, so therefore this thing is going to happen axiomatically. I'd be careful with that. Anyway, having said that, I didn't, and Trump said he's not going to pay out the food stamps, but even, look, even with the government shutdown, and I talked about this, like Fridays, that first of the month flows for November, they were enormous. Here's another thing. Yesterday, we had a 2.3, I think it was a 2.3 or a 2.8 billion net drain. Even with a Social Security payment, we ended up with a net drain. Well, how did that happen? Because we had like 43 or 44 billion in employment taxes, withholding taxes. That's another thing to me that's very odd because, we're in the government shutdown. You got workers who've been laid off. You got workers who have been furloughed, right? And I mean, government is taken in. That was the biggest one-day take of employment taxes so far for this fiscal year, which started on October 1st. Okay, the biggest, 43.8 billion. I mean, that was huge. So that was a little bit strange to me that, we're in the government shutdown, workers are getting laid off, they're getting furloughed, and then the government is still taking in these massive withholding taxes. So I don't know, weird stuff going on. We had that, what I told you, there would be a calendar issue with the year-over-year comparison in leading spending flows, and that was pretty much corrected in today's data, which actually was for yesterday's numbers. But we're still like 20 billion over last year. But I suspect that that's going to drop down to zero or go back to negative very soon. So once we get a clearer picture of what's happening with these flows, look, I'll say this, without hesitation. Net government transfers, net flows, they're negative. Okay, and they are going to stay negative because of the tariffs. The only way that thing turns around, that scenario, is if the Supreme Court shoots down Trump's tariffs. And I don't know if that's going to happen. But as long as the tariffs are in place, net government transfers are down year over year, and that is going to increase, okay? That's the water level in the swimming pool. I've been telling you guys about that. Leading flows, which is the water coming out of that pipe, flowing into the swimming pool, okay? We had a big gusher of water on Friday. Now, the volume of that pipe, of the water coming out of that pipe on Friday was like freaking huge. All right. And now it's back down to more of a normal level when you compare it, when I do that year over year comparison. And I'm saying that I don't know if that's going to keep trending down. I'm telling you that net transfers are going to keep trending down. And at some point, that's going to be an issue. Maybe it already is. I mean, we see the way gold is reacting. We see even how stocks reacted today. Because that portends, that signals ultimately at some point an economic slowdown. But the leading flows, they're kind of like the regulator of that drop in net government transfers. If leading flows are coming out strong, net government transfers are going to decline more, in a slower pace. If leading flows come down again, and especially if they go negative year over year, which they were before Friday, then net government transfers are going to drop fast and big time. Okay, and that's just bad. That's bearish, flat out. So we still have the November 14th quarterly interest payment. November's a little tricky. It's normally the beginning of a bullish trend in stocks. We got very positive fiscal, but we have all these other things going on with the government shutdown and, of course, with the tariffs. So I need to give it a little bit more time. I'm like I've been telling you guys, I'm focusing now on leading flows. Not that I'm ignoring the net transfers. I'm not. I'm looking at them both. But I put leading flows at the top. If those things go back to negative, then I think it's pretty clear what the trend is for flows, at least during the government shutdown. If they open the government back up, if they resolve this shutdown, we need to give it a little bit more time. I wish I could be more, black and white on this thing. If you hold a gun to my head, I'm saying that we're in a declining flows environment, and that's not good. In the very short term now, we had big flows on Friday. We're going to get another big one. Is that next week already, the 14th? I think it is. Next Friday. So in this period, we could still have a positive flow environment. If I'm confusing you, it's because it's just right now it's a little bit of an unclear issue. But again, if you hold a gun to my head and you ask me, Mike, what do you think is happening with the flows? I would say they're declining, especially net transfers are declining. Yeah, so that's pretty much it. The other thing that might have happened today, I mean, we got the New York City election. Maybe that spooked the market a little bit with Mamdani going to be elected. Who knows? I mean, I've seen stranger things spook the market. Like I mentioned, Trump said he's not going to pay out the SNAP, but, I don't think that's really, I mean, flows were going down even when SNAP was being paid out. The other thing I'm thinking was because of Friday's big reserve addition, right? Almost 150 billion, 130 billion net on Friday. That big reserve addition into the banking system on Friday could have been a little bit destabilizing. All right, that's like, you want an analogy? That's like the python that swallows the pig, right? It has to go through the body. It's a big bulge in there. It has to be digested by the system. That is a huge amount of new assets added to the system very quickly on one day. All right, so it puts some constraints on financial institutions. All of a sudden, they get hit with this massive increase in reserves, and that hinders them a little bit insofar as can they add other assets? No, they got to absorb that. All right, and we had this problem going back, if you remember, before at the time when we were operating under the debt ceiling. I kept mentioning this. All these days that used to be positive with big flows, they became negative because the system had to adjust. Now we're not under the debt ceiling constraint anymore, but you had very low levels of reserves. 2.8 trillion. We see that popping up as little brush fires financially here and there with some smaller financial institutions. And so you had low levels, and then all of a sudden, you get this big dump of reserves. If you think of it like you got some little pool of water, some pond that's almost drying up, muddy, and then all of a sudden you get this massive dump of water that goes in there. The pond can't absorb it. It flows over. All right. So that's it, man. I mean, we'll have to see over the next couple of days. But in any case, the upside to the market now is limited. Okay. The upside is limited because of what's happening with tariffs. To another degree, the government shutdown, but mainly tariffs. The upside is limited to the market and to economic growth right now. The only thing I would be leaving out on this, which it's hard to quantify, would be the foreign sector. In other words, is the trade deficit shrinking? And at what pace is it shrinking? We don't see that data. We only see that data every quarter. We can look at the US dollar, which I told you guys is in a bullish trend, which is now at a 4-month high. That is an indicator. That is a sign that the trade deficit might be shrinking. That would be an offset to what's happening to fiscal flows from the federal government. All right, so that's an important thing to pay attention to. It's an important thing to consider, to keep on the radar screen, so to speak, because when you think about it, that's really the intent in the big macro picture. That is really the intent of the tariffs. He wants to shift the global economy. He wants to change it so that the foreign sector becomes the net spender, taking the federal government not completely out of the picture, but reducing its role as the net spender. I mean, if you really want to talk big macro picture, that is what's behind his thinking, or his advisors' thinking, Trump's thinking, his advisors. Force the foreign sector to become more of a net spender by introducing tariffs, by putting tariffs on the situation. So that's a that's a large concept. It's a fundamental reshaping of the global economy if it succeeds. It's not something that happens overnight. Like I said, it's like turning around a super tanker. You don't just turn on a dime. It takes a long time to turn that thing around. But that is the big macro, at least that's the intention of the whole thing. Whether or not it works out, we don't know. But it's something, like I said, we got to always keep that on our radar screen. Anyway, that's it for today. A lot of complicated talk, but it's not really. I mean, you know what? When things sound complicated, just step back, absorb what you can. Don't freak out. I go over stuff every day, like repetition, so it starts to sink in. Give time for the data to play out. I mean, don't freak out. Absorb what you can. You don't have to make a move immediately. I mean, it's like the market's always going to be there. Things are, macroeconomic things, they don't switch in a day. All right. So the best thing to do is just stay calm, stay relaxed. All right. I picked up a few, new concepts or understandings today. We'll give it a little time. We'll see how it plays out. Everything is cool. Everything is okay. Just, we got to chill a little bit. All right. Thank you for watching my video. Please give it a like and a subscribe. I'm trying to get to 11,000. And don't forget to go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. See you tomorrow. Bye.